So what's up guys, it's your boy Michelle again here on YouTube. Welcome back to the channel. Those who are new, please just, if you like this content, please just subscribe and like the videos so that they can be recommended to more people and then we can grow as a community. So today we are going to be continuing on our strategy. We are going to be talking about the second thing in my strategy. Without further ado, let's go straight into our video. This is now the third video on my strategy, which means we are only left with 6. We are 1/3 to completing this playlist of people to completely understand how I take my trade. So today we are going to be looking at the second thing I look when I'm trading. On the first day I told you that first I look at trend. I first look at direction bias. So I think this should be on top because it is the one that shows me what my daily bias. This should be here, right? Since it's the one that shows me my daily bias, and market structure should be at the bottom because it is the one which we use to execute our trades. So first of all, I look at my daily bias. How do I know my daily bias? Like what direction I will be looking to go in at a certain pair on that day. I use my EMAs. Secondly, I can use what trend lines, and then thirdly, I can use what market structure. This video is going to be about our optimum trading zone or area of interest. Alright, so first of all, we are going to talk about the demand and supply. The strategy might seem like we are looking at a lot of things, but why trade only fair value gaps? Then you'll be caught with the demand and supply zone of the 4 hour, right? It's these, I made this strategy, right, in regard of what I was experiencing. Like I told you, I started removing the RSI, right, out after experimenting a lot of things, some confluences like the divergence, some of the things like channel trading. I started removing them, right, to make it a bit cleaner. But this is how I trade. This is how I've been consistent since last year, right? Consistently profitable since last year. Just this strategy. As it is, it might look like a lot of things, but as it is, that's how I just use it. It's not difficult. If you understand it well, it's not difficult. People are using this strategy and they are being profitable, so it's not difficult. There are no any complicated indicators that you need to implement or any complicated concept that you need to complement. Just use it as it is. So when I was executing my markets, I was usually executing in 15 minutes, right? Since last year, 5 minutes I started using it this year. When I was executing my markets, most of the times I would just see the market now reversing. When I go back in the 4 hour, I see that it is a huge demand and supply zone. So it might be in a downtrend, right? But it only reacts on a demand and supply zone to take out your stop loss and then continues in the direction. So you should look at these factors, right? Am I not going into a demand and supply zone of the 4 hour time frame, right? So this is when I started just drawing them so that I am aware of them. I do not get into a trap that I go in a bit of a profit, then I'm stopped out, right? And then it goes back into my direction, right? I also use this demand and supply zone of the 4 hour as an area of interest when I'm entering. If it breaks that demand and supply zone and it retests of the 4 hour, once I'm in a 15 minutes, I know that This is a very strong confluence for me to enter the trade. Secondly, we have psychological levels. Now, these psychological levels, I draw them after every 50 pips on current space, whether be it GBP JPY, GBP USD, GBP CAD, USD JPY, USD CAD, or AUD JPY. Those are the 6 pairs that I trade on what? On current space. Then for gold, I usually used to put 100 pips, but nowadays, with the way gold is moving, as we all know, the markets are dynamic, right? The markets are always changing. You should always adapt your strategy, right? You should always adapt your strategy with the current time. As we all know that last year I was using I was using Jeffrey Benson's 4-hour weekly high and weekly low strategy. But now, as for now, I see that it is no more valid, right? I was profitable with it, and most probably someone is still using it and they are still profitable, right? So it is somehow subjective, but my point is the markets are what? The markets are dynamic, right? They are always changing, and you need to also to adapt with with the time, with how the markets are also how the markets are also changing, right? So I no more use the divergence, the RSI, the channel trading, the weekly high and weekly low, because they are no more valid, right? And with that being said, I also no more use 100 pips for psychological levels on gold. We all know what gold did. It is now approaching $3,500 per ounce right now, right? It now has a high volatility that if you put a stop loss which is less than 50 pips, even if you are in 5 minutes, you are most likely to be taken out, right? So my psychological levels, how can they be only 100 pips when my stop loss is maybe 130 pips? It does not make sense, right? At other pairs, I use a psychological levels of 50 pips. Why? Because my stop loss is usually 15 pips, 20 pips. The other thing we are going to be looking at today is pullbacks, or the support and resistance levels in the 15 minutes time frame. As you all know, I draw them with the green rectangles or the orange rectangles. The orange rectangles being for resistance and the green rectangles being for support. So that when there is a support, if the graph comes back to the support to bounce back or making a double bottom or something like that, we can execute at that area. And then the fourth one is fair value gaps, right? These fair value gaps, as you can see, I mainly look at the fair value gaps in the 1 hour. I also look sometimes, because when you now have experience and you have a long time in the markets, you just see it in passing. I'm seeing a 30 minutes fair value gap, right? Whilst I'm also trading in 5 minutes, right? I'm seeing a 4-hour fair value gap. Whilst I'm trading in 15 minutes. Those retests of those fair value gaps, right? Or those breakouts of those fair value gaps going in your direction, they are very valid. And now, some people, right, using this strategy, you see them entering, right, doing the wrong thing and being profitable, and then one day they'll just start losing until all their profits are taken out. Like I had someone who was using this strategy. They turned their $1,000 to about 2.1, and they lost it back to about 500, which means they were now in 500 drawdown because they deposited 1,000. And they said, what is wrong? And I said, you were being profitable whilst you are doing the wrong thing. What was happening? They were using my strategy, but they were starting from here, from the second phase, optimum trading zone, right? The trend was in their notebook, but they were not using it. What do I mean? Whether you're at an optimum trading zone, as long as you are not along the trend, do not take that trade, right? Do not enter into that particular trade. If you're into an optimum trading zone and there's an uptrend and you want to take a sell position, do not take that trade. I beg you. This is what that person was doing. This will just show you how these optimum trading zones are very influential in the markets, right? how this optimum trade is what strong confluences in what in a market. Why? Because if someone was just using only demand and supply, do you know other people, they only use demand and supply zone, they do not even look at the trend when they are taking their trade. So using only optimum trading zone, you can be profitable. But I'm telling you, what I do is, first of all, I trade with the trend, I go with the flow, then I use this. If you use these two, most probably are going to be profitable. Whether what or what, but let's just use the blueprint as it is. If a builder gives you a blueprint, right? If you are a constructor and you are given a blueprint by an architect, just use as it is, right? Just use as it is. If you now want to tweak something and add up something, you are no more following the plan. The clients which you are building for, they are not going to be happy because you are now doing your own thing, right? So just use the blueprint as it is. No need to tweak it. No need to remove the trend, or maybe to remove the entry signal or exit criteria out of the strategy. Just use as it is. If I say I'm profitable using this strategy as it is, just use it as it is and see if it works for you. If it does not work for you, look for what works for you. That's why I'm publishing the whole course of everything I learned. Some things which I do not use that might be helpful for you, right? And these other things which I still use, right? So you just be choosing, right? There will be diversity. You can choose whatever is what is best for you. Let's get straight into our video. My forex simulator, it is not downloading data at all. It downloads up to mid, and then it stops. I do not know what is happening. So getting straight into our charts, I'm going to be talking first of all about the 4-hour demand and supply zone, right? So I think I reset this. I deleted everything on the gold chart. Let's look at other pairs. Yeah, you can see these blue areas, they are demand and supply zone, which will be in the previous history of the 4-hour. So I just extend them to the what? I just extend them to the right. So if you look at this, you can see that there is always strong reaction, right? Whether we are in the 15 minutes, 30 minutes, there is always strong reaction on these demand and supply levels, right? For example, here we have two reactions. Third one, 4, 5, 6 going to the upward, and then finally when we break, we retest and we went downwards, and we break, we retest and we go upward. It's like a magnet. We retest again and we go upward. It's like a magnet everywhere. It is what making reactions. So for example, when I got profit on this trade, let me put it in the 15 minutes so that I can see where the entry signal was, right? When I caught my TP on this trade, right, it was this demand and supply zone that was what being retested, and we entered right on this trade after this doji candle. Most probably I entered it in the what, in the 5 minutes, right? So you can see, just as it came to the demand and supply zone, the candles did not even close below the demand and supply zone. They became what? Weak candles, like pin bars. This one became a doji, which is on the mid, and this doji with this huge bearish candle and the bullish engulfing candle, they created the morning star. which is a reversal pattern. So this is how the example of the 4-hour demand and supply zone influence our market. So you just go to a chart. Let me open a new chart which I have never traded before. Let's say Euro USD, right? I just put my chart in the 4-hour. They are easy to see. They are very easy to see, right? For example, right here, this is a demand and supply zone right here. So since I have already saved the template, I'll just use it right here, and we go to the 15 minutes time frame. Let me just look at this point only in the 15 minutes time frame. Although I execute Euro USD, if I was trading Euro USD, I would execute it in 5 minutes. Why? Because it is a slow moving pair, right? So you can see in the 15 minutes now, this in the 4-hour it will be a single candle, but in the 15 minutes you can see that it is acting as a resistance. It is acting as a resistance, right? And then the graph goes down. When it comes back again, it does a small rejection again on that area, but then the bullish show their power, and the graph breaks the 4-hour and then retests. Looking at it in the 5 minutes, it will be like this. Looking at it in the 5 minutes, it will be like this. This is why I told you how. That's why if I was trading something as slow as Euro USD, I'll be looking at the 5 minutes. Looking in the 5 minutes, you can see, right, that at this area, right, I don't know what the ATR was telling us, the average true range, but if I'm only to use this candle, which is if I'm only to use this candle, which is 14 pips, right, I would say 14 pips plus 5, which gives me 19, roughly 20 pips. 20 pips will be my stop loss. So I'll come at this point, right? As soon as this dodge candle closes, I know that the 4-hour demand and supply zone has served its purpose, right? Now I'm just waiting for maybe an additional confluence or something, but as soon as the dodge candle closes, you could have entered this position. But let's say you waited long enough to see this morning star get created. I shall explain later about entry signal so that you can understand what a morning star is and what these dodge candles I'll be talking about they are. So I would put my stop loss on 20 pips and my take profit on 60 pips, which means I easily get a 1 to 3 risk to reward ratio. And to show you that this is slow, right? Yes, I'm executing exactly at the New York opens because it is at 10 past 4 p.m. and New York opens at 4 p.m. In Moscow time, right? So I'm getting a nice stop, which is just in the area of the demand and supply, which means if it crosses this, for sure I'm wrong, right? I'm getting a nice stop, and according to our psychology, we say engulfing candle plus 5 pips, or the ATR plus 5 pips, which I do not know what it was giving me, which is why I used the size of the candle, right? So you can see we entered at 6:10 and the trade ended at around 5 minutes to what? At 4:10 and the trade ended at around 5 minutes to what? 5 minutes to 6, which is pretty fast for Euro USD, which is pretty fast because this is less than 2 hours, right? This is about 1 hour 45 minutes for this play out. So this is how simply I just use what my 4-hour demand and supply zone. I use them for retest, and I also use them, maybe let's say we are what, we are in an uptrend right here. We are in an uptrend right here. And I see my entry confirmation here. I won't enter this trade. Why? I will not enter this trade. And I see my entry confirmation after this morning star and the pin back candle. And maybe I want to enter this trade here with a 20 pips what stop loss. I will not enter. You can see it did not reach because of this level. You see what I was talking about, how these levels are very influential. It will just go in your direction, give you a bit of a profit. This is what was happening to me exactly when I was a beginner. It would just get into 1-to-1 or 1-to-1.5 profit. And when I was a beginner, I was still even using 1:2. It would not even reach 1-to-2, but it would be more than 1-to-1 restore what, and then what, go against me. And I asked myself, why is this happening? Then I started looking what, top down analysis. Now I started looking from the most high time frame to what, to the smallest time frame, and I saw that every time when I'm taking out, if we look at it in the 4-hour time frame, there is a certain reaction, right? There are certain rejections from the previous records at that same level. So this is how I use it as an area of interest to enter an entry, and I also use it to avoid pointless entries, to avoid pointless stop losses, right? And then moving on, we move on to psychological levels. Not to waste our time, let's just move on to what, to a pair which I've already drawn what, psychological levels. So as I told you, I draw a resistance levels, orange one, but do you wonder why I do not draw it here, or why I do not draw it here? It's because they are reacting to my psychological levels, which are after every 50 pips. For example, why I did not draw the green line here, or a red and orange square here, is because it is reacting to what, the psychological levels. They are always reactions. You can see 1, 2, 1. They are always reactions at what? At psychological levels. So at psychological levels, I can use them also as areas of interest. This trade, I entered it due to what? Due to the break and retest of this resistance level, right? This was our area of interest. And we also had a double confirmation that we now also had a 4-hour demand and supply zone area of interest at the same area. So you can also use this psychological level as a break and retest. For example, you could have executed here, right? This would be a very nice and a very good confluence. Or you could have executed here, right? although it would take slow to play out, because maybe your take profit will be around somewhere here, because it will be a 45 pips take profit if it is GBP USD with a 15 pips stop loss. So this is a nice entry. I don't know if I can find exactly. I found it, the trade which I entered using psychological levels. This trade, most probably we entered this trade together. We had an engulfing candle, right? We were having a resistance on psychological level, so I do not draw the resistance line, and after resistance we broke out of it. I was just waiting. It's 8 a.m. I'm awake but I'm waiting. 9 a.m. I'm awake but I'm waiting, because it has not done anything. At 10 past 9 now, as you know, I start trading at 10 o'clock to 11 o'clock, but there's somewhere when you see that we should strike while the iron is still hot, right? This was 9:15, 45 minutes before my entry time, right? At 20 past 9, this is when I entered this trade. Why? Because it was a break, right, of the psychological level, and it came back to retest this psychological level. Why do I call them psychological levels? Psychological levels, if you Google even right now, maybe using ChatGPT or directly on the browser, psychological levels, they are believed to be where big institutions put their take profits, stop losses, buy orders and sell orders, right? So these are where there will be a lot of orders, right? So there is a lot of rejections and a lot of reactions on these on these levels. And as you can see, because of the 4 hour, as I told you, it started rejecting, but I was convinced because of of my trend. I had a strong belief in my trend, and we also protected our capital at this level. We put all our positions in break even at this level, right? So break and retest of a psychological level, then I entered my trade. Now pullbacks are, most of the times you have seen me use this. Pullbacks, we are in an uptrend, the graph pulls back, we draw our green support level, it pulls back, we draw our green support level. Why am I putting these green support levels? I am just waiting for the time when the graph will just make one move, right? Not to break out, one move to just come and retest, and then I can enter. So I don't know if on this pair there's such an example, right, where I entered, where I executed such a trade. This is a support. When it came back, if I was on the markets, by that time I was not on the markets because it was already 9, and by 8 I will be no more trading at all. If I was on the market seeing this dodgy candle, right, I would have executed this trade, because this is a support and it did not show promise of breaking out of the support. The candle closed even above, right? It did not even close below the area. It gave us a huge rejection and left a dodgy candle. So this is what I'll be just looking out at, that if it just makes one move to retest that level exactly. We were on this trade together. It was a live session last Thursday. It came and gave us a pullback. What's going up is my support. So I was anticipating, right, that if it just comes down and grabs this low, right, we are going to go up, as long as it does not close the low, right, or as long as it shows entry signal. Here you cannot enter. Why? Because there is no engulfing candle, there's no doji, there's no morning or evening star, right? So you cannot enter. But at this level, we have an engulfing candle, right? And we have several pin bars. But I do not usually like only pin bars. If it is a pin bar, at least let it be a doji candle, or a pin bar with a morning star, or a pin bar with an engulfing candle. So I was just waiting for it to come back to this support and the support level, and then retest to retest the support level, and then go and break out and give us our take profits. So this is just it, guys, on support and resistance. I use them, I draw them in the 15 minutes. They are not drawn in the 5 minutes. I draw them in the 15 minutes. So going back to the pair that I do not trade, Euro USD, how I draw them. Euro USD, I'm just looking for where it is a bit clean, where it is a bit trending in the 15 minutes. Yeah, this is a very good example. So for example, right here, if my EMAs are showing that it's a downtrend, not when they are talking about opposite. If my EMAs are showing that it's a downtrend, right, I can come and start drawing no. I can come and start drawing my resistance levels in the 15 minutes. When you go back now to the 5 minutes, you see that this will be very influential. So I'm just drawing lower highs until a lower high is broken. So here it was broken though. And just like that, this is how it's simple. When you get used to the market, you see how simple it is. So let's say there was a break of structure somewhere around here and we started moving upward. You just start drawing your support levels now. You just start drawing your support levels, going like that. So this is just how I anticipate my trade and start moving. And then let's get into the 5 minutes right here. You see now, whilst I have drawn this in the in the 15 minutes, it comes, it is support, it supports again 1 2 3 10. When it comes the third time, what time is it? It's around 8. Most of us are awake right here, right? It comes, it retests, right? It gives me a bullish engulfing candle. Or maybe you were not on the markets at this time, but or maybe you are waiting for an additional confluence. Secondly, it gives us a morning star leaving a doji candle right here, right? A very huge bullish engulfing candle with a morning star, right? We have 3 candlestick patterns here. 1, this doji candle. 2, the morning star. And 3, this bullish engulfing candle, which engulfed the 2 bearish candles on the left of it. So either you could enter at this position, right, with a 20 pips stop loss. We are just using 20 for the video, for average, right? 20 pips stop loss and a take profit of 60 pips, right? Most usually for Euro USD it is less than 20 pips. I know it because I use 15 pips for GBP USD and it is faster than Euro USD. So you could have entered a position like this at this level, right? Or you could have entered here after this bullish candle. All will be the same because you easily get your 1 to 2 risk to reward. That's what we target when we are in the market. At least if I'm losing 1, I should gain 2, right, in the long run. If I'm losing 1, I should gain 2 in the long run. So you can see that this trade, it played midnight, also you would have entered maybe at 8 a.m. So yeah, Euro USD is a bit slow, but whilst it's being slow, most of the times it will be having a stop loss of 7 pips. So by the time it is in the afternoon, at least you would have already taken a 21 pips in your direction. If it's stop loss, yeah, it's all well and good as long as you are doing something which is correct. So that is how I trade on pullbacks, or the support and resistance, right, which mark the structure of the market. Now after pullbacks, I'm now going to move on to fair value gaps. Now fair value gaps, you should be able to look at them because long run it will be easy to notice these things. Let's take for example, we have a bearish fair value gap here in our 1 hour. So let me mark it, right? We have a bearish fair value gap here. As you can see, the wick of this candle with the wick with this candle with this bearish engulfing candle, we have a bearish fair value gap. Now I drew my fair value gap in the 1 hour. I go back to my 15 minutes. I look at the fair value gap. At the point of fair value gap, do I have an entry signal? Yes. And what time is it? 11 a.m. Everyone will be awake at this time. So not personally, I'll be awake. I won't speak for you guys because I don't know, but personally I'll be awake. So at this level, I see that we have a retest of the fair value gap, right? Because the fair value gap was made from this candle up to around this candle in the 1 hour. Now we are retesting the fair value gap. On retesting the fair value gap, we now have an engulfing candle. So this is my area of interest. I have a downtrend, but where do I enter? I can't enter just entering maybe here, right? Because there's an engulfing candle, then I just enter. Or maybe entering given the downtrend, maybe entering somewhere here. This will be expensive if it doesn't go well for you, or just entering somewhere here, because I see a pin bar. You should have an area of interest, right? What area is pushing the graph in your direction? Is it a psychological level, or a 4-hour demand and supply zone, or a 1 hour fair value gap? So these 1 hour fair value gaps have been very useful to me for this past 4 months. Like I started using them this year. I look at them in the 1 hour and then go back to my time frame in the 15 minutes, in the 5 minutes. So since it is Euro USD, let's look for the fair value gap in the 5 minutes right here. As you can see, we have 2 pin bars and a doji candle right here. So on seeing this, I will enter. I'm now confident. I have my entry signal, my trend, as well as area of interest, which is the fair value gap. So this is how you use a fair value gap. You draw it in a in a 1 hour. Let's put 15 pips here, and then I'll take profit 45 pips for a 1 to 3 risk to reward, right? So it played from around to 12 p.m. to 4 p.m., which is about 4 hours. That is good. It's about 3 hours. 3 hours 25 minutes. So this is good, guys. This is how we just use the fair value gap, and lastly we use the Fibonacci retracement, right? So this Fibonacci retracement, it is usually used soon after the crossovers of the EMAs. Let's say in 4 hours they were moving upwards, right? In 1 hour they've just crossed over, and in 30 minutes they just cross off. Most of the times there will be not yet a market structure. The break of market structure will be just recent. There will be not yet a clear trend, right? Because it will be just being created. So what do we use this Fibonacci retracement to? Like, let's just say, for example, you're in the 15 minutes and there was a big break of structure. Wait a moment. Yeah, we are going in an upward direction and there's a break of structure here, right? This was what was the previous low, this one, and then it was broken down, right? This was the previous support, and then they broke it down. So when they make a support, you are already anticipating to draw your resistance, your other support, I mean. So you have a break of structure and you have this support. What do I use the Fibonacci for? The Fibonacci, I measure from the top of the high to the to the low, right? And I look for an area which is 50% to 61.8%. That area I just mark it with a square, like so. And after marking it, Fibonacci retracement, after marking it, I delete this guy so that my chart can be a bit more clear, right? So this has not yet happened. We are looking at Fibonacci. So you are anticipating that there is going to be a pullback up to this area. If it has not yet reached this area, you are not getting in. This is how the Fibonacci retracement works. So going back into our 5 minutes time frame, right? Going back into our 5 minutes time frame, you can see when it came to the 50% retracement, right? There was huge weak rejections, 1, 2, 3 week rejections, a lot of pin bars and 2 doji candles right here. You could have entered at any one of them, right? Or maybe you are one of those latecomers on the markets. It came back again, and then this time it retested the 61.8% of the pullback went 61.8%, right? So you have an engulfing candle with a pin bar, a second bearish engulfing candle with a pin bar. You could have entered one of these, right? So putting my entry here, right, after this engulfing candle had completed, or maybe after this engulfing candle had completed, right, I put my stop loss of 15 pips and a take profit of 45 pips. This is my usual take profit and stop loss for GBP USD. That's why I'm just using it. So this trade was just consolidating, but that's when I closed all my markets. But let's say you just left it riding, right, and then you closed it at the time when you exit the market at 8, it would give you a 2.5. This is why I don't trade Euro USD. It is very slow. and it does not make big moves. These 45 pips, they are easy for GBP, USD, and other pairs, but for Euro USD, impossible. It's like they are impossible. So this is how you use the Fibonacci retracement. This is why I don't use it a lot of times, because a lot of times I'm already looking at a trending market, right? I'm not looking at a recent break of market structure or a recent crossover of my EMAs, but I use it. Don't always look for it. Don't always place it on the markets and always looking for Fibonacci retracement, because it's not that important for this strategy. But in a case that you are seeing that there's a fresh break of structure or a fresh crossover of EMAs, that's when you use it, right? When you have your high and your low and you want to calculate where the pullback, and the market is already doing a pullback, and you want to calculate where the pullback will reach, that's when you place your Fibonacci retracement. These are the 5 main things I use on Optimum trading zone. I use a lot of things, but I don't want to confuse you guys. If I start talking about sessions highs and sessions lows and a lot of other things, it will be now overwhelming. But seeing this and seeing how I trade on my live sessions, seeing how I trade in the group giving you signals, you should be able to also implement the same thing and also produce same results as I am producing. So this is it, guys. I think this is the end of the video. We have already talked about everything I had placed here, right? Demand and supply zone, we covered it. Psychological levels, we covered it. Pullbacks, we covered it, and how to use them. Fair value gaps, we covered them. How to draw them and how to use them, and Fibonacci retracement. If you want to learn more about these things like fair value gaps, I know they might be confusing. You should watch the course, right? When I'm now doing each of these concepts in detail, because this is like playing a game, right? Playing a game. You are told that to pass, you press this button. To score, you press this button, and to dribble and to tackle, you press this kind of buttons, right? If you want to be a professional gamer, you are now going on each of those. You are going to make drills for tackling only, maybe 10 drills for tackling. And when you master tackling, you are going to do 10 drills for scoring, 10 drills for free kicks, 10 drills for penalties, and so on and so on. It's just an example. When you have now done drills in detail of each concept, when you now combine them together, at first it will be a bit difficult, but in 2, 3, 4, 5 matches, right, playing the game, maybe a professional game, playing the game, right, it will be now clicking. You now be used to the system, right? It will be now like you hacked the system, because you now know everything in detail, and when you are now implementing it, it is like at the fingertips. You know what people call the muscle memory, right? You are no more looking at the buttons that A is the one which I'm going to use to pass the ball, or X or a box, right? It's the one which I'm going to use to pass the ball. No, it's now in the system. Like for instance, when you are writing spellings, right, in your own language, you don't write letter by letter, like maybe orientation, and you are writing ORIENT, thinking letter by letter in the head. You now write it very smoothly, right? For example, your name, you don't think twice, you write it very smoothly and fast. But when you started learning about it, maybe in preschool, it was in detail. You were being taught how to shape maybe for A, you were being told to first draw a smart circle and then a what? That small line. But when you are now in the process, right, when you have learned everything in detail and you have understood it, when you are now combining them, when you are now on the charts, it will be now easy. It will be clicking. You'll be seeing everything clearly, right? Like the matrix. You'll be seeing everything clearly and it will be interesting. You'll enjoy the process. So after watching the strategy and you want to implement the strategy, because some things they don't work for other people, but if you want to try it out and if you believe it will work for you, you have to watch the course and see these things in detail and see how they are used, how they are implemented. When you see how they are created, how they are implemented, when you come back to the strategy, it will be now a walkover. Like for example, a person might not understand how I was using the Fibonacci retracement, but if you watch a full video in the course of a Fibonacci retracement, it will be easy. Or maybe fair value gaps. If you watch one video of fair value gaps only, not fair value gaps also in the video of the Optimum trading zone, like it will be only the surface. It will not be in detail. So this is why I said, if I publish the course, then what? This is why I said, if you complete the watching the strategy, then go to the course. When you come back to the strategy, it is now a walkover. It is now easy for you. You will be now you'll be now a master in the market. So with that being said, guys, until next time, peace out.